So if you're looking to buy a house this year, but you're struggling to find the best ways to do it, or your deposit isn't where it needs to be, then I'm going to break down a couple of options that you might want to consider going into this year that might get you on the property ladder. Hi everyone, I'm Sam Fox, a mortgage expert here in the UK, and on my channel on YouTube, I go through the entire home buying process, from savings tips to mortgage rates to interest to lenders, you name it, whatever you put in the comments, I will sit here every Monday and create an upload. So on that note, please make sure you like and subscribe. It works wonders for us and it helps grow the channel and help even more first-time buyers. Now, with that out of the way, let's get started. All right, so look, we know buying a house is an exciting chapter in anybody's life, let alone taking a mortgage for a couple of $100,000, which can be a bit of a headache, but having the appeal of your own property, your own home, to do whatever you want in there can be a dream for many. But we know that saving up and affordability can be a real issue. Now, with the growing rental prices in the UK, yes, we know they're creeping up all the time, it can sometimes be hard to break that cycle, which is why the good news is there's lots of mortgage lenders and products out there pumping innovation into our industry to try and help people just like you get onto the property ladder. So I'm going to go through 3 different ways you can approach house buying this year. So the first things first, shared ownership. You may have heard it if you've got a smaller deposit and you're looking to get on the property ladder, or if you're like me, the first time I came across it was on Rightmove. When you're looking through it all and you think there's a 4-bedroom house on the market for 80 grand. What is going on? So that is what's called shared ownership, and it'll advertise on Rightmove or Zoopla or the other property portals with a lower purchase price, but the house might look absolutely massive. So what shared ownership means is you buy between 10% and 75% of the purchase price of the property. The other percentage share is owned by typically a housing association. So what would happen is you would pay a mortgage payment to a mortgage lender, let's say somebody like Nationwide, and then at the same time of the month you would also pay rental income a rental payment to the housing association. So you own 50%, rent the other 50%. Now the great things for this is it gives you access to properties much earlier than otherwise you'd save them for a massive deposit. So it means that you've got the ability to save a 10% deposit on a 50% of the purchase price, but it's giving you access to a much bigger house than having to save for a £300,000-400,000 house. Now the beauty of shared ownership as well is it allows you to staircase. Now staircasing means, look, you're going to buy a house now, you might only buy 25%, and the housing association are going to own the other 3/4. But over time, if you love that house and you want to stay there, you can then buy another share of 25%. You can then buy another 25%, all the way up to 100%. So yes, in the early days, you may own a small percentage of the house, but at the end of it, you could own 100% of it. So what's going to happen there is you're going to have access to a potentially better, bigger home earlier with a lesser deposit, with a lower mortgage payment, and it's giving you the aspirations to own that house in its entirety. Now, on the other side of shared ownership, the considerations are you still going to pay rent. So you might face restrictions on how you sell it. So I'll give you an example. If you buy a shared ownership property, some of the housing associations may have a covenant in there, which means that in the first 5 years, if you go to sell your house, they've got first refusal to list it on the market, or you have to sell it to somebody else who's a first-time buyer for a 50% share. So there's a couple of little things that you need to get your head around, which somebody working with a mortgage broker, we can help you look through that sort of stuff to make sure that shared ownership is suitable for you and your needs. Now, there might be restrictions on what you can do to the house as well. So if you want to purchase at 50% and throw a conservatory on, or renovate the kitchen, you may need to seek prior approval from the housing association because they own a stake in the house as well. So it might be easy when you own 100%, but it might feel a little bit restrictive on that front. Next is right to buy. Now, this scheme allows eligible tenants to purchase their rented social housing home at a discounted price. So the benefits of this scheme are typically you don't need any deposit. Now, if you're in a social housing home at the moment, you've lived there for a number of years, then the discount can be absolutely massive. And what would happen is ease of numbers. Let's say it's a house worth £200,000. The discount on there brings it down to £150,000 purchase, where you can buy it at the 200 and use a £50,000 towards your deposit, which means you get a 75% loan to value product, which means the interest rates will be lower and your payments are more manageable. Now, the only considerations here is that you do have to already be renting and you have to apply to the council under the right to buy scheme and have that approved and valued that, they'll sell it to you. But then the considerations for that are you are liable for all the maintenance, the costs, and the discounts might be limited depending on the area. Now, when you go to sell this house, a bit like shared ownership, there may be restrictions on who you can sell it to. So if in the first 5 years, sometimes 10 years, you go to sell the house, then the local council or housing association might be the ones that get the first refusal to take that back from you as well. So that's something to know. And the third one for today's video is high loan to value products. Now, over the past, I'd say 12 to 18 months, there's been so much innovation in our industry, so much so that lenders have come back to 100% lending. Now, I don't mean in a sense that 100% lending where it was 3 years ago was that parents have to secure the deposit against their house so you can buy yours at 100%. It's genuine 100% loan to value. Now, these are designed for people who've been renting for at least 12 months and have got a good track record, clear credit history, good incomes, but just can't save for a deposit. As I said before, the rental market's so expensive now. It's so hard to save £1,000 a month and maintain a household bills and look after a family at the same time. But these mortgage products are designed for those people and young people and families who want to purchase a house but are struggling to save a deposit. There are lots of caveats and lots of criteria around that, so do your research. But there's also lenders coming to the market with a £5,000 deposit scheme. Again, there are limitations on the purchase price of the property. You've got to have good credit history and that kind of thing. So there are schemes available where if you've got a couple of grand saved, you might still be able to buy. But these are really niche schemes that you need to do your research on. Good income, good credit score, good affordability is what's needed, and we need to make sure that all your documentation is lined up beforehand. The only caveat to these is because you're buying at 100% loan to value or 97.5%, 98% loan to value, depending on the product, the lender has taken a lot more risk. And what you'll find is the interest rates here are higher than what they would be if you had a 10% deposit. So as long as the numbers stack up and we can stomach the higher interest rate and know that it's just a short-term solution to get you on the property ladder, these high loan to value products can be great for anyone in those positions. Now, in this video, I've just picked 3 things to talk about today, but we do have another video that's ranking all the first-time buyer schemes available in the UK and what they should be considered and if they're worth any value anyway. So make sure you check it out. We'll drop a link here in this video so you can go straight to it. Now, if you are a first-time buyer and you're looking to purchase this year and you need any help, whether it's starting out at the moment or it's trying to find the right product, make sure you do me a favor, drop me a message. It's sam@ukmc.co.uk and we'll help you as quick as we can.